Hello, this is Alex from ONG Tax and Accounting Services. So in this video, we're going to take a look at the latest press release that came out from the Treasury, Department of Treasury and the IRS. And the release is talking about the fact that there's a partial suspension, okay, of the U.S. Russia Tax Treaty that was signed in 1992. So we're going to dive deep into what this all means for taxpayers, non-resident alien taxpayers who are doing business in the U.S. or receiving any kind of income, whether they are taxable or subject to withholding. We're going to talk about the various provisions that's been affected, and this is really huge because there's a bunch of Russian business owners and investors who have many kind of entities here in the U.S., whether it's an LLC or a corporation or a partnership. There's just so many business owners and investors here. And also, this also affect the suspension of the treaty also affect U.S. taxpayers that has some kind of income that they're collecting from within Russia. And so we're going to talk about on the U.S. side, okay? So we're going to talk about the 1992 tax treaty with the U.S. that the U.S. have with Russia, and then also talk about the various provisions that has been suspended for now. Now, let's start off by saying that this video is for educational purposes only. It is not meant to be a tax or legal advice. And if at any point in time you need a legal or tax advice, you should always consult with a competent attorney or a CPA who can help you out. Now, as usual, tax treaty issues most of the time has to do with, proper interpretation of the law. Okay, so when you're dealing with tax treaties, I would say that the best kind of expertise or the best type of people that you should be getting advice from should be tax attorneys. And then sometimes, some CPAs can help interpret, the treaty provisions. But in most cases, I have seen that tax attorneys are very helpful. And so just be cautious when you're dealing with treaties. All right. So the announcement that came out today says that the U.S. Department of Treasury, which is on June 17, 2024, they announced that the United States has provided formal notice to the Russian Federation, and it's confirming the suspension of paragraph 4 of Article 1. And then it talks about Article 5 to 21 and then Article 23 of the tax treaty. So we're going to take a look at what all these articles are. Okay, so it looks like the suspension does not affect all of the treaty. It affects certain important provisions within the treaty. So we'll take a look at all these articles that's been mentioned here and see what type of income has been affected by this suspension of the tax treaty. Now, this suspension is going to take effect on August 16, 2024. If you have any kind of income to collect, if you're a Russian non-resident alien who has any type of income that's affected by the U.S. tax treaty and you want to collect it, then now is the best time to start getting paid. Because if you wait till August 16, 2024, that's when all those provisions that's been mentioned here, which is the Article 1, 5 to 21 and 23, that's when they terminate. And after that, the default U.S. tax rules would apply to you. So we'll take a look at them and see how it's going to affect business owners, both U.S. people that are doing outbound transactions and then Russian taxpayers that are also doing inbound transactions. So when the press release came through, I really didn't understand what's going on. So I tried to Google a little bit about the suspension, and it turns out, so I was reading this web page here from one of our congressmen website, and I see that headline, right? And it says that Cortez, Masto, and Cornyn push for Treasury to suspend Russia tax treaty. So it looks like this is something that has been on the table for a while. And then it's, over here, it says that U.S. Senators Catherine Cortez Masto, I think she's a Democrat in Nevada, and then you have John Cornyn, who is a Republican in Texas. And so they basically they were part of the people or Congress people pushing for the suspension to happen. When you continue reading, it looks like Putin made the decision to suspend many of the treaty provisions. Okay, so I click on the link. So it looks like Putin took the first action, right? And the US has also responded accordingly because treaty provisions are mutual. Okay, so whatever happens to the other side has to happen in here. So the treaty has been suspended. So now let's go through some of the IRS page and look at the list of countries that are there in terms of the tax treaty provisions that the US have with other countries. I'm scrolling through here, and the first country that pops up for me that has a comment on here is a Hungary treaty that's been terminated. Okay, so if you're someone from Hungary and you're receiving any kind of income that's withholdable or any kind of income that is subject to effectively connected income taxation and all of that, you need to figure out when this termination took effect and act accordingly. And then also let's go to Russia. So Russia doesn't have any notes here, but because I guess it's because the termination is not effective yet. It's going to be effective on, let's check the date real quick. It's going to be effective on August 16, 2024. So I'm sure that by August 16th, there's going to be some notes over here that says that there's a partial suspension of the treaty. All right. So I've opened the tax treaty document, and so I'm trying to compare it with what is being mentioned here. So you have Article 1. So let's look at Article 1. So this is Article 1, and the suspension applies to paragraph 4. Okay, so let's go to Article 1 and see what's there. And it also, Article 1 also deals with the savings clause. Okay, I'm going to make this video short, so I'm not going to go into the details of describing what the savings clause is. You should Google it and you understand what the savings clause are. Okay, but in general, the savings clause makes sure that regardless of what the treaty says, okay, a contracting state, meaning that US and Russia, may tax its residents or its citizens in accordance with their domestic tax laws. Okay, so a savings clause makes it look like you're still going to be taxed anyways, regardless of the treaty, as if you are subject to tax as a resident or a citizen within these specific countries. But then within that savings clause, there's also some exceptions, right? So exceptions of certain income that will not be taxed by one of the countries, you know, despite the fact that there's a savings clause. So it's a very complicated area. I might not be explaining it well, and so you should Google it. And there's a lot of articles on savings clause, and you'll get to understand it. But basically, if we take out paragraph 4 from this whole thing, okay, that means that we need to fall back on this language that a contracting state, okay, may tax in accordance with its domestic laws, residents as determined under Article 4, residents, citizens or former citizens of that state. Okay, so this is basically defaulting you to the domestic laws. So if you're receiving any kind of income and it's subject to withholding, for example, if it's interest, dividends, royalties, we know that without a tax treaty, withholding on those type of FDAP income is 30%. So the removal of all of this kind of, if we remove everything here and then we fall back on paragraph 3 here, then it means that the US can tax you, you know, on the US taxable income as if there's no tax treaty. So if you're from Russia and you're receiving things like dividend, you're basically being taxed the same as someone who is from maybe Brazil, countries that don't have a tax treaty with the US. Okay, so you're paying the default withholding rate because of this suspension. All right, now let's move on to the other provisions. All right, so the next provisions we're going to take a look at is Articles 5 to 21. Now let's take a look at Article 5, permanent establishment. You may have, for example, a Russian non-resident alien who is doing business here in the US. Due to the certain activities they have, may have effectively connected income because their business may be considered to be engaging in U.S. trade or business. So if you're engaged in U.S. trade or business, then you have effectively connected income. Okay. And if you're not from a tax treaty country, okay, you'll get taxed on that effectively connected income. However, the second layer of the protection that treaty provides is that, look, it would say that even though you have effectively connected income, you may still end up not paying taxes in the U.S. if you can prove that the income you made was not out of a permanent establishment in the U.S. Okay, so you take two countries, put them on the same table, and I like to use Brazil because Brazil doesn't have a tax treaty with the U.S. If you have a Brazilian taxpayer who has ECI, that taxpayer is going to be taxed, okay, based on the tax bracket that's been spelled out or labeled by the IRS. And if you have someone from a tax treaty country who is also making the same money that the Brazilian is making, but then he comes from a tax treaty country, then that person is not going to pay any taxes, but still need to declare or still needs to invoke the tax treaty because the tax treaty protects them from being taxed, even though they have ECI. Okay. So then again, the Brazilian who has ECI will be taxed because there's no treaty protection. Someone from, Russia will not be taxed because after the ECI analysis, we still have to do the permanent establishment analysis, and we do the permanent establishment analysis and we realize they don't have permanent establishment, then they don't get to pay taxes. They just have to declare the treaty on their tax return, and that's it. But with the suspension of this treaty provision for Russian taxpayers, that means that effective August 16, 2024, okay, you and the Brazilian that does not have a tax treaty provision with the U.S. will be the same. Okay, so both of you will be paying taxes on your ECI. So this is basically what the permanent establishment removal in this article, in this treaty provision is going to be doing. Okay, it's going to be very devastating because we have a lot of Russian clients, Russian taxpayers, Russian investors that are doing some great business here. So we'll see how this goes during the course of the year or in the future. All right. So Article 6 talks about business profit, and it's basically kind of intertwined with the permanent establishment that we talked about, where business profit will generally be taxed in the US if you have permanent establishment. But then now, because of the suspension, business profit is going to be taxed as long as that business profit is ECI or was born out of being engaged in U.S. trade or business. So that's Article 6 for you. And then you have Article 7, adjustment of income in cases where persons participate directly or indirectly in management control of capital of other persons. So if you get a time, you can read what this type of income is. It's not something that I deal with a lot, so I'm not going to waste time talking about it. And then you have Article 8, international transport. Now let's talk about it a bit. International transport. So it talks about the fact that income of a resident of a contracting state. So here, let's replace contracting state with Russia. Okay. Income of a resident of Russia from the operation of ships or aircraft in international traffic shall be taxed only in that state. So here what it's saying is that because of Article 8, okay, if you're Russian, okay, and you're operating ships or aircraft in international traffic, that should only be taxable in your home country. Because this is going to be removed, this is going to be suspended, you need to look at the local laws, the domestic U.S. laws, to figure out how international transport income is being taxed. There's more provisions here, but I'm just giving you, just this one that makes it that I understand. Okay, there's more provisions that you need to read here, but basically all of this is gone. Anything that is here is gone, and you need to fall back to the domestic tax laws that we have, the Internal Revenue Code. Now let's move on to Article 9, income from real property. It says that income derived by a resident of a contracting state. So let's replace contracting state with Russia. Okay, income derived by a resident of Russia from real property, including agricultural forestry, situated in the U.S. may be taxed in the U.S. This provision is going to go. It's going to be suspended. Everything out here is going to be suspended. So you need to read everything here figure out how they applied to you in the past and how they're going to affect you in the future. Now, if we remove this article now or suspend it, then you need to resort to the local laws, okay, the domestic laws, Internal Revenue Code. And what does the Internal Revenue Code says about income from real property? Now, income from real property could be rentals, leasing income, okay? It could also be that when you sell the real property, you make capital gains. All of those is going to be taxed here in the U.S. So you need to figure out how rental, leases, and capital gains are being taxed, okay? And what expenses you can take when you're using the local laws or the domestic laws. Let's go to Article 10, dividends, okay? So dividends withholding, we use the example of a Brazilian receives dividend and there's a flat rate of 30%. And in the past, if a Russian received dividend, I mean, we can go to the tax treaty table real quick. So you go to Google, you type in tax treaty table. And then what you're going to do is you're going to go to this one here, compensation other than personal income. Okay. And this table is going to tell you all the type of income. So we're going to narrow down to Russia. Where's Russia? Yeah, yes, Russia. Okay. So then I guess we can start from the top here and we can find Russia somewhere here. Yeah. Okay. So then you take a look at this. Okay. Take a look at this. Russia here. Let's see. Russia. And we were just looking at dividends, Article 10. Okay. So we go back to the table here. Article 10. Okay. 10.2. Now, Article 10.2 says that if you are a resident from Russia and you're receiving dividends in the U.S., it's 10% if you are an individual receiving it, and it's 5% for direct shareholders, okay, for qualifying direct dividend rates. Qualifying direct dividend rate applies to corporations, foreign corporations that owns 10% or more in a U.S. domestic company. So if you fall within that range, and you're from Russia, you get 5% withholding. But if you're an individual, a person receiving dividends, your withholding rate is 10%. Okay. So what's happening? Article 10 is included in this suspension. So when Article 10 is gone, you will be paying 30% on any dividends that's paid to you, effective August 16, 2024. Okay. So let's move on to Article 11, interest. Same thing. Okay. Interest, when you go here, Russia, it used to be zero. If you're receiving interest, if you're receiving interest income, it used to be zero. When this all goes away, you're paying 30% of tax withholding. Article 13, independent personal services. You can read more about it. Independent personal services, basically, if you come here to do, perform services and all of that stuff. And then there are some rules as long as you don't stay 183 days and you can claim the treaty and all of that because you don't have a permanent establishment. If you're an independent contractor, performing independent personal services, then you could exclude your income up to a certain limitation. So you need to read here. But what's the purpose of reading here? It still doesn't apply to you anymore because it's going to be suspended. And so you resort to the Internal Revenue Code on what it says when a foreign person performs independent personal services in the U.S., how they are taxed. Generally, when you come here and perform independent personal services, you're considered to be engaged in U.S. trade or business, and you must report the ECI income. Okay, so this protection is gone. And then you have income from employment. You can read all of this. My time is running out. You have director's fees. It's gone. You have government services, pensions, student trainees and researchers. Again, you don't have to read this treaty anymore. After August 16, 2024, you need to read the Internal Revenue Code on how this all applies to you. 19, other income, you can read more on it. Limitation of benefit, read more on it. You have capital gains, okay, read more. Article, so we've done from 5 to 21. And then the next one is Article 23. So Article 23 talks about non-discrimination. Again, take some time to read all of this and how it applies to you. But then again, when you take your time to read it, after August 16, this doesn't apply to you, so you resort to the Internal Revenue Code. This is just a quick review of the Russia-U.S. Tax Treaty suspension. And if you are a Russian, investor or business owner, and you want to understand how this impacts you, like I said from the beginning, you may contact a tax attorney that understands these treaties and how it works, or you can give us a call. We're always here helping international clients from all over the world, and we can help you figure out what your obligations are going forward. Also, if you are a withholding agent, you need to also know the effective date, okay? Because if you're paying any kind of withholdable income, income that are subject to withholding to a Russian, a non-resident alien, and all of that stuff, it is important to you that you understand the effective date of the suspension so you don't continue applying the treaty rates, okay? You need to resort to the Internal Revenue Code, resort to the default rate for non-resident without treaty after August 16 on certain types of income that you're paying. So advising yourself accordingly is in order. All right. So I hope this helps you guys out. If it does, please subscribe, like, and share, and come to you with another video. Thanks. Bye.